Welcome to Earnings Central. In this video, we'll break down United Natural Foods' first quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. Let's get started. Starting with top-line revenue, the original estimate for Q1 was $7.61 billion. The company actually reported revenue of $7.87 billion, surpassing expectations by 3.4%. This quarterly revenue also marked a 4.2% increase compared to the $7.55 billion reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q1 was a loss of 2 cents. The company actually reported a profit of 16 cents, crushing expectations by 18 cents per share. This result also reflects an even larger 20 cents per share increase compared to the loss of 4 cents reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. The company delivered some impressive metrics that show they're making real progress in operational efficiency. First up, they achieved a remarkable 15% growth in Adjusted EBITDA compared to the same quarter last year. This isn't just a small bump. It's a significant improvement that demonstrates their ability to drive profitability. Digging deeper into their operational efficiency, UNFI saw a 5% improvement in cases per hour in their distribution centers. Now, that might sound like a minor detail, but in the world of wholesale distribution, every percentage point of productivity counts. This improvement is a direct result of their new lean management principles, which we'll talk more about in a moment. One of the most noteworthy achievements this quarter was bringing shrink reduction back to pre-COVID levels. For those who might not know, shrink refers to inventory loss, and getting this under control is crucial for maintaining healthy margins. The fact that they've managed to do this shows disciplined inventory management. The company also increased net sales per employee by 6%. This is huge because it means they're getting more productive output from their workforce. It's not just about cutting costs, it's about working smarter and more efficiently. And let's talk about free cash flow. UNFI is projecting over $100 million in free cash flow for the year, which is a significant improvement from previous years. This matters because it gives the company more financial flexibility and helps them pay down debt. Now, let's shift focus to some of the key insights and takeaways from the earnings call. The big story here is their implementation of lean management principles. Think of lean as a philosophy of continuous improvement, finding ways to eliminate waste, increase efficiency, and create more value. They've already piloted this in 2 distribution centers and are seeing promising results like improved fulfillment quality and on-time delivery. Their natural and organic segment continues to be a major growth driver. While conventional grocery faces challenges, the natural and organic portfolio is seeing mid-single to mid-double-digit growth. Some of their private brand portfolios are growing at 10% to mid-teens, which is impressive in today's market. Distribution center optimization is another key strategy. They've closed facilities in Billings, Bismarck, and are planning to close the Fort Wayne Center. But here's the smart part. They're retaining most of the business by shifting volume to more modern, efficient facilities. It's not just about cutting costs. It's about improving service and capacity. Their supplier go-to-market program is also gaining traction. They're helping suppliers expand their retail store distribution, providing data insights and simplifying fee structures. One example they shared was helping a large supplier recover nearly 95% of skewed distribution opportunities lost during the COVID pandemic. UNFI is seeing success by helping customers differentiate themselves. Whether it's supporting multicultural-focused retailers or helping traditional grocers add natural and organic products, they're positioning themselves as a strategic partner, not just a distributor. Lastly, they remain committed to deleveraging. By selling off real estate from closed distribution centers and maintaining strict financial discipline, they're working towards reducing their net leverage to 2.5x by the end of 2027. So, what's the bottom line? UNFI is transforming from a traditional wholesale distributor to a more strategic, efficient, and value-added partner for retailers and suppliers. They're not just cutting costs. They're reimagining how a food distributor can create value. That wraps up our recap of United Natural Foods' first quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way. From Earnings Central,